In this video, I'm going to walk you guys through how I made 39% return on capital in 1 day trading put options with AMC. So here you can see a 30-minute chart of AMC, and this is the kind of context of the price action over the last few days. So AMC was hovering around the $5 mark and then had a massive gap down on news of a reverse split, taking the stock all the way down to $3.88. Now on the 5th of April at this area here, I decided to sell the $2 put option. And what that basically means is I'm willing to buy 100 shares of AMC at $2. And for that, the buyer of the option would pay me a credit. Now, the question is why did I sell a put option on AMC? When I like to trade, I like to look at the volatility of a particular stock in comparison to its last 52 weeks. And that's known as the avid rank, which again, it takes the last 52 weeks of the implied volatility and normalizes it in a scale of 0 to 100. So if we head over to the Tasty Trade platform, and if we head over to the ticker AMC.IVR, and what that does is just plots the volatility of AMC, and I'm looking at the last year. You can see here on the 3rd of April and the 4th of April, we saw a massive increase in volatility. And what that was is, if I head back over to Webull, it's this massive spike down. So generally what happens is if a stock price tanks, the implied volatility goes up, which is what you saw over here. So I missed it. I did the trade on the 5th of April, which was actually on this candle over here. So I could have got a better fill and made more money if I got into this trade sooner. So what I saw was this massive volatility spike. And what generally happens is volatility is a mean reverting asset, which basically means that it will normalize down. So what I like to do is I like to trade stocks that have an implied volatility greater than 30. The higher the number, the better. So I wish I did get into the trade when AMC did initial move down. For whatever reason, I kind of dismissed it. I don't even know why, but it kind of came on my radar when it had a implied volatility of around 50. So on the 5th of April, with the IV rank above 50, so it's greater than my predetermined benchmark of 30, I decided to place a put option. So I've got the screenshot now of the put option that I sold. So I sold the May 19th $2 put option. And when I sell options, I like to sell options between 45 to 60 days out. So I think this was around 45 days till expiration. Now, there are two reasons why I placed this trade outside of the volatility. One is the margin required to hold this trade is $62.36. So I do have a 5-figure account, and so this isn't a big trade for me. And this wasn't about the number of contracts. It's just about the way I trade and my methodology of where I trade. I could have put more contracts in, but I only did the one contract in this example. I got filled at $41, or 41 cents, one contract times by 100, that's $41. So I made $41, and all I needed to put up was $62 to place the trade. That is a 66% return on capital if I let this trade go to expiration. AMC expires out the money and I realize the full $41. When I talk a lot about trading, I talk about the only edge we really have in trading is upon trade entry. What I mean by that is trading small. So the minimum size that you can trade in options is one contract. And at the same time, I want to make sure that when I am trading on trade entry, my return on capital is at least 15% or more. So when you actually look at it, like I mentioned, it's a 66% return on capital upon trade entry. And if you look at the delta, is 8, 9 really, you could argue. So not only have I got a over 90% probability of profit, combined with a 66% return on capital on trade entry, that is why I placed this trade. So if we fast forward a day later with volatility dropping and AMC gapping up and filling that gap it left from the previous couple of days, I managed to buy this option back for $17. So I sold it originally for 41. I bought it back for 17. That netted me $24 of profit on this trade for 39% return on capital. So that, in terms of the total premium that I captured of the $24 of the 41 I could have made, that is a 58% realized in one day on a 45-day option to capture 58% of the total premium, I'm not going to hold the risk on here. If I've realized over 50% of the option in the space of a day, let alone a few days, I'm taking that option off the table and realizing and booking those profits in. So I wanted to walk you guys through this. Again, the key things to take away from this is I like to trade options that have an IV rank greater than 30. So I've got some videos on the screen now that will help you to understand more about my trading strategy and approach. And let's just see you guys in the next video.